But yeah, I'm Luke. I'm the VP of strategy here. So I oversee growth, email, creative, and data departments. And I'm really going to build off of what Taylor laid the groundwork for, which is our core belief that the path to profitability starts with clarity. We truly believe this. That is what we're building our core system around here at CTC. And that is what we're going to continue to invest in, is the path to profitability starts with clarity. And how do we deliver the highest level of clarity to you as brand owner, decision maker, marketer along the way?
This episode of the e-commerce playbook is brought to you by Sorall. Rising CAC and meta dependence is killing your brand. You're paying more every quarter for the same results, and every algorithm change feels like a punch to the gut. While everyone's fighting over the same expensive ad space, smart brands are building something they actually own: communities of influencers who create consistent content for them. If you're thinking influencer marketing doesn't work for us, the issue might be your approach. You're playing influencer roulette, sending products to random influencers and hoping they post. What works is building a predictable influence system. That's what Sorall helps over 250 brands like Obvi, SolarWave, and REM Beauty do. They give you the strategic support to build this model that actually drives results. Head to getsorall.com/demo to see how this works for your brand.
An example of that is last year, we talked about this in the same sort of a session. It was when we launched our Incrementality tool. So this is the beta version of our Incrementality tool. It is something that we had looked out at the space and seen the variety of marketing measurement tools available. And we believe that geo-holdout testing was a gold standard of measurement. We believe there's consensus across this point, but there weren't solutions available in the market for two main reasons that were prohibitive. One was the cost. Many solutions that existed were $10,000 a month or more on 12-month contracts, and it was cost prohibitive for most brands being able to participate in the gold standard of marketing measurement. And then the second was there was a roadblock to operationalizing the result of each of these tests as well, where these platforms, you'd have your incrementality tool or your MTA tool, and they would live in silos disconnected from your financial forecast or your Shopify dashboard. And so operationalizing the result of these tests in terms of what is the impact on my business, how do I actually go and execute and make decisions on a day-to-day basis against that, made it very challenging. So over the course of the last year, we've been consistently improving our platform, expanding the test to be able to do new channels and tactics. So outside of Meta, Google non-brand, Google brand, being able to test AppLove and Snapchat and Pinterest and YouTube demand gen, to be able to test expanding into these net new channels. Also have expanded to be able to assess a brand's impact against both the .com as well as the Amazon revenue. So understand what your Amazon halo effect is when there's multiple distribution points involved, which is key to understanding what the full impact of the media spend is. And then worked on more deeply integrating it into the daily workflow of how the test results actually get operationalized on your behalf. So we get a test result. How did that show up in terms of the day-to-day decision making? And really what we were looking to solve for was what we saw as the web of marketing measurement that existed, that the amount of time that we spent in conversations and you all spent in conversations and looking for solutions was eating up a substantial amount of time and resources. And there was a lack of clarity in terms of how all of these things connected. So most of us have interacted with most of these tools and many others that can be shown on this, from the Finaloops to Google Ads in platform reported results, to Adobe Analytics, to Polar Analytics, to Workmagic, and trying to understand how do each of these platforms tie to one another and somehow to triangulate the data between them all to arrive at a decision for the business. This is the core lack of clarity that exists in the market around marketing measurement and the lack of tools available for those main two prohibitive reasons that we went to solve by building out our incrementality tool. And the operationalizing of the result is really, really important. I want to hone in on this because what we're not going to do in the future is to continue to invest in our technology and provide new tools, fun features that show up but are disparate and disconnected from each other. What we're most interested in is how is this actually going to make an impact for the business at the end of the day, connecting the results of that feature of that tool to a decision-making factor that impacts the contribution margin of the business. And this is how it shows up in our incrementality workflow. So on the left there, we have the result of an incrementality test. We're able to see the true incremental impact of that specific channel or platform on new customer revenue on your .com store, returning customer revenue on your .com store, and then total website revenue for your .com, as well as the Amazon halo effect. And we're able to get to a high confidence level, a p-value of 0.9 or better on each of these tests, so that we have high confidence in the result. Then from there, we take the result, we integrate it into the stat list settings, which adjust the on-platform reported performance, on-platform reported revenue for each of these channels, adjust it for the incrementality based on this test result, so that everywhere in stat list that we look, all the reports, the home dashboard, when we set the ROAS targets for the channels, everything is adjusted and calibrated by the test result that we have 90% confidence or better in. And then this is a picture of the tracker tab Taylor walked through earlier, where every day we have targets for spend and ROAS for every single campaign on every single platform that are calibrated by that test result. That is what we see as being the gap that exists in relation to a lot of the tools that exist in the space, and what we are solving for with the rollout of the incrementality testing tool at this same time last year. And what we've been able to do over the course of the past year is partner with you on over 100 incrementality tests on more than 10 different platforms. And that's given us clarity and confidence in the core channels that we're investing in to be able to continue to invest in those channels. And this visual here, this chart on the left, plots a subset of those tests on Meta, Google brand, and Google non-brand platforms, the core channels that make up the majority of a lot of our ad spend investment. And each of those plots is a test result looking at the platform ROAS, which is on the bottom, the x-axis there, platform reported ROAS against the iROAS, which is on the y-axis there, to draw the relationship between, for that specific brand on that specific platform, what is the platform ROAS versus incremental ROAS relationship? Is the platform over or under reporting its result relative to what the true incremental impact was? And that blue diagonal line going from the bottom of the chart up to the top right represents 100% incrementality. So if you have a test that falls directly on that blue diagonal line, what that indicates is the platform is reporting exactly what the true incremental ROAS of that test was. That represents 100% incrementality. And it's really fascinating because what you can see, so Meta tests are all those little blue dots, Google brand are all the yellow dots, and then Google non-brand are the off-white gray dots there. And you can see Meta tends to cluster pretty close to that line across many of our tests. Cluster pretty close to 100% incrementality. On the other hand, Google brand tends to fall below the 100% incrementality line pretty drastically. And that's all of what our experiences of Google brand are in different spaces, is the platform ROAS is over-reporting relative to the iROAS for those platforms. And then Google non-brand tends to have the most disparate results in terms of the test result against the incrementality factor. So you're seeing dots well above 100% incrementality, well below incrementality. And the chart here on the right illustrates this in a different way, where you can see Meta is the blue here, where it indexes closer to 100% or more incrementality against the platform reported result. Google non-brand index is lower in terms of incrementality, and then Google non-brand has sort of the widest spread in the test results against the platform reported ROAS. What this has enabled us to do, again, is get more confidence in terms of the core channels that we're investing in to inform the incrementality benchmarks that we have, how much of the spread of the results that we see in each of these things to help prioritize where we prioritize each of these incrementality tests and where we deploy the ad dollar. So this is our incrementality testing priority tool, where we take those incrementality benchmarks, we apply it against what your platform revenue is reported on that channel. And then based on the lower bound and upper bound spread of the incrementality results, we're able to identify which channel represents the widest variation in terms of the potential reported result against what the incremental result will be. And that's the channel we're going to go after and test first. So Google non-brand represents the biggest opportunity based on where this brand is spending and the lower and upper bound result. That's what we're going to go after first. Then we're going to go after Facebook acquisition and on down the line from there. So it's allowed us to get higher confidence in terms of these benchmarks, which is helpful. But it's also shown us, like we saw in this chart, that there's a wide spread in terms of the results on a brand by brand level, creating the necessity that every business needs to test this for themselves.
Are you tired of watching your meta ad costs climb every month while your ROAS gets worse? A lot of D2C founders are feeling trapped in this cycle. You need the traffic, but you're basically renting attention that keeps getting more expensive. Here's what's working. Smart brands are building something they actually own, communities of influencers who genuinely love their product and create consistent content for them. The problem is most brands do the spray and pray thing, send products to random influencers and cross your fingers. That's influencer roulette, and you're gambling with your budget. But when you build a predictable system instead of playing roulette, that's when it works. Over 250 brands like Obvi, SolarWave, and REM Beauty are doing this with Soral. They don't just throw software at you, they help you build the system. Ready to stop gambling? Check out getsoral.com/demo.
Thus, we need a solution that is lower cost and connects to the core output in terms of the decision making and the system to be able to allow for that. So I wanted to bring us back to a year ago when we talked about that relative to our incrementality tool, and we built that over the past year to provide us that level of clarity as an illustration of what we're going to continue to do in terms of investing in our core system to provide clarity at this level through tools like incrementality and the other tools that Taylor walked through earlier, our modeling, planning and forecasting, the tracker tabs in Compass, as well as the new tools that we'll invest in over the coming months and years. But I want to take a pause here because the path to profitability starts with clarity. But like Taylor mentioned, we're not trying to create clarity for clarity's sake. We're not starting and ending with clarity. Clarity is the starting point for us to be able to go into novel action and then make decisions from a point of clarity with. And we've been thinking about a visual and a metaphor to help tie all these things together, because one thing that we've thought about and talked about a lot over the recent months is how many moving pieces there are in terms of CTC systems and our tools, and we tack on new things in the sidebar of Statless over time, and we roll out new service offerings, and it can feel disjointed and disconnected in terms of what we're doing, I think, at times. So we've thought about what is the metaphor for what we're doing here at CTC that brings all of these pieces together. And I think we found the perfect one. It's beautiful. This is The Dark Side of the Moon, Pink Floyd, one of the most iconic albums of its time. Second only maybe to Steely Dan's Asia. But what this also is a refractive prism. So a refractive prism it's cut in a certain way. The glass is done in certain angles. It's cut in a certain way for light to be able to pass from one side and then be refracted on the other side in a very particular manner. The light needs to be refracted at a specific angle to get to a certain target. And the prism is what guides the light from one side into the output on the other side. So a way to think about this that we're all probably familiar with is most cameras, like DSLR cameras, have prisms that sit inside of them. If you were to take out that refractive prism, you would still have the camera, you'd still have the light on both sides of the camera, you'd still be able to look through the camera, you'd have all the things on the other side of the camera, but what you'd be seeing through it is upside down picture, things would be blurry and disconnected, and what you could do is go and take 100 shots with the camera, and you might get lucky and get a good shot through that. But once you drop the prism in, everything comes into focus, everything's right side up, everything's clear, and now you can go and get the shot that's perfect without having to go and troubleshoot in that way. And that's how we think about our core system at CTC, as the refractive prism that we're building to be able to guide that level of clarity. So what lives inside the refractive prism is our models and forecasting in the plan section, marketing measurement and incrementality through our studies section. It's creative demand and persona building that lives at Compass, campaign level daily forecasting that lives in the tracker tabs, daily targets for 35 plus critical metrics that lives in the home dashboard, and then 45 plus reports that live in the reporting section for us to be able to do the insight generation to get to the result. All of this on the foundation of Statless as the integration and consolidation of your sales costs and marketing data. And what we're going to continue to do is invest in the core system, the core prism of CTC to provide clarity. I had a good conversation last night with Scott and John. Scott and Nike Strength I really appreciate it, because we were talking about things that are working well and not so well in terms of the relationship and technology and things that we can improve. And Scott said, I actually don't really like statless, because when I look at it, I always have in the back of my mind, something's off. And like the contribution margin, I got to it's 10% inflated. So I got to kind of like whittle it down in my mind, and it actually leads to less clarity for me. And I want you to hear, Scott, I want everyone to hear that we hear you in those frustrations. And it's the reason why we're pursuing and have the partnership with the Acacia Group like we do, and for the reasons that Taylor mentioned. These aren't easy problems to solve, and we're really focused on being able to solve them to get the core system to the level of clarity needed to build this prism that sits at the intersection of everything, which gives us clarity on the decision making. But the path to profitability starts with clarity, but clarity is not the end result. So what are we trying to get to by building the prism that sits at the intersection of all of it? Well, Taylor talked about this earlier. We look across our data set of brands, and we're able to see not just the raw data, revenue and ad spend and contribution margin over time. We also have we're ingesting all the marketing actions that are being taken against that outcome. So the marketing calendar, new Facebook campaigns launched, new email campaigns launched, and we're able to plot those things over time and see the impact of it. So this is the calendar report in Statlist. This is for 8 brands who are sitting here for different points of time this year. And so you can see revenue and ad spend plotted over time, and then the various marketing actions that led to different outcomes over the course of each of these time periods. And we believe it's our responsibility to be able to build a core engine, the core prism that guides clarity, but to also look out across our data set and look at these marketing actions or these units of growth that are leading to disparate outcomes and producing the best results for brands. To be able to look out and see, what are brands doing? What are the investments they're making that are leading to the growth, and how do we build those services and those solutions that the broader data set can get access to? And so in looking across our data set in this way, we've been able to look at the various places that marketing investment is coming into the prism, right? It's the ray of light that's hitting the prism, and then identify the highest impact units of growth, because the end goal is that the path to profitability starts with clarity, but this should enable confident investment into productive units of growth for all of us, so that we can have the clarity needed to take the swing, to make the decision, to produce growth into the thing that's going to lead to the highest likelihood of success. So in looking across our data set in this way, the various marketing actions and services available, the core things we have identified as being crucial to providing profitable growth in this way as units of growth we want to be able to offer are 3 main things. The first is channel expansion. So channel expansion, think about this as net new channels and tactics. So this is, we're running on Meta, we're running on Google non-brand, running on Google brand. How do we think about expanding into YouTube demand gen and AppLovin and Snapchat? And what that's going to get us to is incremental customers that we're acquiring for the business, right? The next unit of growth being creative. Creative volume is crucial, as we've seen, we all know, but what is also necessary is diversity in the creative. And then to be able to achieve creative volume, we need lower cost solutions available to be able to get that. In the first session, Dean and I were having an aside, we were talking about 2,000 ads, 4,000 ads. And one of the biggest barriers there is like, if it's $500 per ad, like how are we going to get there in terms of the investment? So we need the solutions available that provide creative diversity, but also at a cost that makes the volume possible for us to be able to scale the spend volume while keeping the efficiency constraint in line with what our goals are. And then the third unit of growth that's crucial in terms of providing impact for these brands is on the email side. So campaigns, flows, segmentation, having an email strategy that really provides the foundation for growth. And it's incredible. Like looking across our data set at the email and automation systems that we all have in place, there is a wide variety in terms of how that shows up. There's not a consistent baseline in terms of every brand here, we have these 10 automations live and they have these many touch points and the segmentation is done this way. There's, for this brand, 3 here. This brand has 30 and each of them have 17 touch points, and everywhere in between. So what are the gaps that exist in relation to that to help drive returning and LTV growth through email? So what we're going to do, I'm going to hand it over to Adrian here, or actually, no, I'm going to talk about channel expansion for 2 more minutes and then hand it over to Adrian. But we're going to talk through each one of these 3 units of growth and how we are building solutions and services here at CTC to help partner with you all and enable expansion into each one of them. So first, channel expansion. This started about 9 months ago. We've had conversations with many of you in regards to YouTube and have labeled this our YouTube 10x initiative, which is to provide YouTube 10x return on YouTube investment over a course of time. So we've really focused on rolling out YouTube because what we saw in a first group of incrementality results was that there was high incrementality in terms of the YouTube platform reported result against what the incrementality result was for that platform. So YouTube really underreported its true impact on the business relative to what the platform was saying. And as a result of focusing on YouTube investment, we've scaled spend on YouTube for a subset of customers 400%, a little over 400% over the course of the first half of this year compared to the first half of last year, as a core area where we're seeing high incrementality in terms of net new channel expansion, and YouTube being a driver for that. And this pairs with what Adrian's going to talk through in terms of creator content, where we're able to fuel the account and fuel YouTube Shorts placements through creator content that we have available as well. A couple other highlights here. So this is to show increased investment into TikTok and YouTube for Skull Candy specifically. So over time here, you can see TikTok ad spend and YouTube ad spend and how YouTube has grown as a percentage of the total, but then the TikTok investment has grown over that time period as well. So January through June year over year, 95% more incremental media dollars deployed into TikTok and YouTube compared to the previous time period. Again, enabled by the clarity of incrementality and then leaning into TikTok and YouTube through the content that we have available. Another one to highlight here for key is increased investment in TikTok, Snapchat, and Pinterest. So those core expansion channels where you can see the increased investment over time from TikTok, Snapchat, and Pinterest, and 46% more incremental media dollars deployed January through June year over year. So this is what we are very focused on in terms of channel expansion into YouTube and channel expansion into Snapchat specifically as core channels that we're seeing opportunity on for brands based on the incrementality results. So find Rachel and Con. I think Con is still stuck on flights, but find Rachel here to share all the tips and insights on what we're seeing on the YouTube side of things, and then Delaney and McKay on the Snapchat side of things. We have a partnership with Snapchat where there's a very high ad credit that they're extending for brands testing on this platform initially, so you can kind of see what that breakdown looks like here. 40K test budget, 15K ad credit, 60K test budget, 20K ad credit. It's a really strong match in this platform where what we're wanting to do is between YouTube and Snapchat, get more brands launching on those with an incrementality test live with the ad credits in play to produce more incremental spend on those channels while keeping the baseline of Meta, Google brand, Google non-brand in play as well. It's going to add net new growth and distribution through each of those ad channels.